I'm not trying to spread fear. I think there's a lot of opportunity in the market. I'm just saying, all right, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk to you about several companies, but from a bigger picture, I want to talk about earnings season and the volatility that's going on right now. And I want to use a few companies as an example. This earnings season has been one of the most dangerous earnings seasons I've seen in a long time. And it's not just the small caps. Typically on this channel, we review small cap companies, small cap high growth, Bitcoin miners. But today I'm going to look at some bigger companies because this seems to be spreading. And there are some very big market cap companies that are getting absolutely taken out on earnings. Some of which, and you can judge for yourself, but some of these earnings reports don't seem to be that bad. So please, if you're new to the channel, do us a favor and hit the subscribe button and the notification bell. And of course, if you enjoy this video, please smash the like button and feel free to drop a comment with your thoughts below. So I want to start out with ROKU. ROKU is a $14 billion company. So that is not a small cap company. And like I said, typically we focus on small cap companies on this channel. But there's some very high flying, extremely popular stocks that are just getting wrecked. So they've come off of their lows. If you look down here, their low on the day was actually $102, and that is their 52-week low. This stock traded as much as $490 within the last 52 weeks. So obviously this drop has been dramatic over the last part of the year, and specifically today, it's down 24% even after rallying a bit today. So I want to take a look at the chart and show you what's going on here. So this is ROKU on the 2-hour time frame. So you can see we closed here yesterday. So in anticipation of earnings, ROKU actually ran down a bunch. And then this morning, it gapped open way down, and you can see it's got a green candle recovering a little bit, but I mean, this is a giant gap down. And if we just take the last 2 days of activity from the high to the low, that was about a 35% swing in the price of ROKU stock. And if I zoom out, you'll see since its highs in July, this stock is down 77%. Last year, those who invested in the small cap stocks, small cap high growth, know that a lot of stocks got taken out 70, 80, 90%. The small cap stocks have been in a bear market for probably the last 8 months off of their highs from last February and March of 2021. So they're only now starting to recover. But as we see the small caps starting to recover, a lot of these large caps are now all of a sudden hitting their 52-week lows, gapping down huge on earnings. So earnings season has turned out to be very dangerous. I tend to try not to trade around earnings anyway. It always feels like it's a guess. You know, sometimes the company does well, but everybody thought they were going to do even better. So, you know, they hit or beat numbers, but the whisper number was higher than that. So the stock goes down, and the reverse. So it's very tricky to try to time earnings. It's something I stay away from. It's more of a day trader philosophy, and I'm sure there's some people that make money that way. So that's fine. For me, I stay clear of that, and this year it is worse than ever. So DraftKings is another one. This stock was at its 52-week low yesterday. And today on earnings, it's gapped down another 18%. You're already talking about a stock that was beaten up badly. It's now a $7 billion stock, but that's because it's trading at $18. This was trading at $74 within the last 52 weeks. So this market cap has been cut by 75%, and it's still a $7 billion company. So if we zoom in, we can see that this was yesterday at the close, and then here you see a giant gap down at the open and further pressure down for the first couple hours of trading today. So again, this is a big gap for a stock that was near its all-time low. Now, it did dip down to this level about 3 weeks ago on January 24th. January 24th, a lot of stocks bottomed out. Bitcoin bottomed out. That was a tough day in the market. So DraftKings actually had a huge run down to that, but it was recovering, and now it's gapped right back down to its 52-week low. And this is another stock where you'll see from its highs in March of 2021, it's down 75%, but I'm doing one more number on this one. Even if I go from its high in September, which was just about 5 months ago, this stock is down 71.5% since September. And again, it's down nearly 20% on the day today. So this is another stock that's having a rough year. And on earnings day, once again, it's gotten taken out big time and it's at or near its 52-week low. I'm going to go over just a few more stocks that have been beaten up badly on their earnings report. And again, you guys can research these earnings reports for yourselves. I didn't think that they were that bad. Some of the reports I actually thought were good, and yet the stock still got destroyed on earnings. Please remember, none of this is financial advice, and obviously every one of these stocks that I'm showing you is very volatile. They're all near their 52-week low, and they all just took a huge gap down. So volatility is up. These are risky stocks, even though some of them are larger cap stocks, companies that aren't used to behaving this way. So I want to talk about Paramount Pictures. This was Viacom CBS. On their earnings day, they rebranded from Viacom CBS. They changed their name to Paramount because one of their main assets is Paramount Pictures as well as Paramount Plus streaming. So I actually did a video on this a few days ago. If you want a deeper dive, you can check out that video, and I go into great detail as to what they do and where I think they're going. But I thought they put out a very good earnings report, and yet you'll see in the 3 days since their earning report, they are down over 21%, most of which was on the day they reported earnings. So this is another stock that got crushed. I'm going to go through just a few more. And again, these are examples. There are more out there, but these are some popular names and some very popular retail stocks that just have gotten decimated on earnings. So this is Palantir. Today was not their big gap down. They actually reported earnings and had a gap down yesterday. This is just a continuation of that today. So they are now down to a $21 billion market cap. So again, all of these are bigger than we're used to looking at on this channel, but I imagine most of you are familiar with most of these stocks. These are big name companies, high profile companies. This is Palantir's chart on the daily time frame. So this is the last year. You'll see they really spiked up last January, so that was just over a year ago. This stock got up to $44. So this was during a period of hyper acceleration for a lot of these popular growth stocks, and this was probably overbought in that range. By March, it had settled down somewhere in the high 20s, somewhere around $27. It retested that again in June. It retested it again in September, and then again in November. Palantir took on the path of a lot of these high growth stocks, most of which are the small cap high growth. Palantir really on, in my opinion, no change in their business model or no new earth-shattering information that would indicate they should be dropping like this. Palantir for November, December, and January just plummeted. Okay, so this is zoomed in on the 2-hour time frame. So in just 2 days since they reported earnings, this stock is down over 22% to where it's trading currently, and it's off of its lows of the day. So this is another stock that was hanging out very near its 52-week low and got totally decimated and is now setting a new 52-week low. And for them, a new all-time low. And I'm just going to throw a couple more at you. I'm not going to go through the charts, but I just want to show you this is really reaching throughout the entire stock market. These next two stocks are large cap stocks, one of which was one of the 6 largest companies traded on the U.S. stock exchange. So no stock has been immune to this earnings season. We have seen crashes at every level, every size stock, every different industry. So the two remaining that I want to just go through are number one, PayPal. So PayPal is up a little bit off of its lows for the day, but if you look at their 52-week range, $103.56, which they hit today, is their 52-week low. They were trading as much as $310. This stock's been hitting a new 52-week low almost every single day for the last 2 weeks. They reported earnings 2 weeks ago, and they are down 40% just over the last 2 weeks, and this is a $120 billion company. Last but by no means least, Facebook, now called Meta Platforms, so stock ticker FB. Facebook was in the $1 trillion club. There's only a handful, you can count them on one hand, the stocks that have been in the $1 trillion market cap. And this was one of them. So you can see they are now down to $587 billion, still making them one of the largest companies in the world. But they are off 37% in the last 2 weeks since they reported earnings. So this stock has gotten decimated. This is another stock that has continued over the last 2 weeks, similar to PayPal, to just hit new 52-week low after new 52-week low. You'll see today it traded down as low as $205.71. It's up a little bit off of that, but still down on the day. But this is now yet another day Facebook, or Meta, has hit its 52-week low. Over the past few months, I've been showing a lot of small cap, high growth stocks that have really gotten decimated, not just on earnings day, but in general, stocks that are down 70, 80, 90%. I feel those stocks are all oversold, but I wanted to do this video even though it's not our normal thing on this channel, because this is getting contagious, and I just wanted to show that now this has spread well beyond the small cap stocks. This is running through the entire stock market. So sometimes just looking at the indexes, the S&P 500 and the NASDAQ, may be misleading, because there are stocks that are having dramatic moves at all levels. So I just kind of wanted to have that conversation and give everybody a heads up. Please be careful trading. It almost seems like no place is safe. I'm not trying to spread fear. I think there's a lot of opportunity in the market. I'm just saying I think everybody needs to be very careful. Make sure to do your due diligence and invest wisely. So thanks so much for watching, and we'll see you in the next video.